Hey, this is David Miller with the Miller Group of Keller Williams Realty, and I'm here to help you get real estate smart. All right, the new stats just came out for the month of September, and I wanted to share them with you. So, number one, and you might have heard this in the news already, for the first time in 11 months, the average median price of a home in Orlando has not gone up. It's gone down. Oh no, I knew this was going to happen. It was a bubble. I should have sold. Hold on, that's not the case. It went down $2,000, which is about 1% compared to what it was the prior month. So not a big deal. To put this in perspective, when you compare it to last year, which in my mind is what counts, it went up 18%. Okay, so September of 2021 is 18% higher than September of 2020. So that means if you own a house, on average, it went up about 18 to 20% is what you're looking at. So that's looking pretty good. So let's look at inventory. Remember, I live and breathe by inventory. As long as inventory stays low and the number of buyers stays high, then we're going to continue to see this type of appreciation. So where do we stand on inventory? Well, inventory compared to last month went up 1%. However, compared to last year, it's down 39%. So inventory is still really low. Matter of fact, it's about a month of supply of inventory. Remember, whenever below 6 months of inventory is considered a seller's market because there's more buyers than sellers, my bad. And we're at 1 month. So we're at the very bottom, very, very strong seller's market. Now, new listings. This is another category I'm starting to look at. How are the new listings coming on the market? Well, compared to last year, we got about 4% more listings than we did last year. But if you compare it to last month, they're down about 8%, unless I can't read my writing here. Maybe it's 3%. So it went down compared to last month. It went up versus last year. What's going on here? Well, seasonality. Obviously, as we get out of the summer months, and August was the last summer month, from a real estate perspective, we start getting in September. There's not as many buyers in the marketplace, so that is understandable. We see that in sales as well. So versus last month, sales dropped 5.25%. However, when you compare it to last year, it was up 9%. All right, so all we're seeing is seasonality. It is still a very strong seller's market. So where's all those distressed properties that they were promising us in January about all these properties are going to hit the market? Well, you're going to have to continue to wait because distressed properties only represented 0.7% of all closed sales. All right, so that's down 37% versus this same time last year, which means last year only represented 1%. So they are not out there. So the question is, where do I see the market heading for the rest of the year? So a couple of changes are coming down the pipe here. Number one, the government announced that starting in the middle of November, they're going to start slowing down how many government-backed loans that they buy. They buy about $40 billion per month. And they do that to really throw a lot of money out there to allow it to artificially keep the rate low. So when they stop buying that, we do expect the interest rates to start taking off. Not taking off, but start going up a little bit. So that will affect the demand because people are going to think, oh, I can no longer get a loan for 2.8%. I got to get it for 3.2%, when it's all relative. That's still a very, very low rate. But that will affect the demand. Inventory will go up a little bit. That's not bad news. That's good news. The way it is right now with inventory so low and the rate of appreciation, it's going to really turn into an affordability issue by the beginning of next year. So that's what I expect to happen through the end of the year. If there's anything we can do to help you with either the buying and selling of your property, please let us know. And I hope that you are now real estate smart. Take care.